Thank you, Excellency, for those remarks. Zimbabwe is truly open for business. I just want to fill in some gaps with a bit of detail for those of you who don't know much about Zimbabwe but are keen to follow through and invest. Zimbabwe will be joining a group of 6 countries in the next 2 years, which are the fastest growing countries in Africa, growing at about 6% per annum. So it will be Zimbabwe, Rwanda, Ghana, Tanzania, Ivory Coast. What have I left out? I think I've covered all of them. All growing above 6%. Those are going to be the fastest growing countries in the world. And that's going to happen there. I'm just showing a chart, and you expect to see, if the colors are not clear, the Africa graph push up a lot higher. These are the fastest growing countries, and that includes Zimbabwe. We have a policy direction in terms of vision. The President has launched the Vision 2030, as he remarked, which will move Zimbabwe to a middle-income country with an income per capita of $3,500 by year 2030, through the pillars of stronger governance, transparency, macro stability, inclusive growth, infrastructure investment, and finally, social development in a way that creates a cohesion. We have a strategy for enacting the vision, which we're calling the Transitional Stabilization Program, which His Excellency will launch in the next 4 weeks, which tries to then drill down to see how this can be enacted. And a key pillar of that is macro policy, which I look after. But a slew of sectors will be targeted: macro policy, institutional arrangements in terms of strengthening institutions, the growth of the services sector, investing in public infrastructure, particularly in inclusive infrastructure, developing human capital, and of course, governance reforms. Let me remind you, those of you who may not know much about Zimbabwe, Zimbabwe has got an excellent human capital base in terms of literacy levels, levels of education. It is up there, absolutely. It has an abundance of natural resources. Top 40 minerals in the world are found in Zimbabwe. It has got a favorable location right in the center of Southern Africa with good infrastructure. Even if you go there now, there's good infrastructure for you to drive around. But we need more infrastructure to make sure that we have 99% coverage of the road networks, access to power, water, and sanitation. We're performing reforms, as His Excellency has enunciated, and the transitional plan will further enunciate that. We're pursuing a debt relief strategy or restructuring strategy so that we can catch up with our arrears, which will allow us to unlock the flow of capital from the rest of the world. In terms of the economy, in 30 seconds, our sectors will be agriculture, services. Actually, the services sector has grown significantly. It's now 19.5% of the economy. Agriculture is about 11.1%. Agriculture is growing at about 14% per annum right now. The fastest growing sector is mining, which is growing at about 30% and is a big driver of the growth that I spoke about, and so forth and so forth. Those of you who care about labor participation rates, that's what they look like. In fact, we've got a high female labor ratio participation, and I wanted to show you this chart specifically to show that we have a good gender balance. At least strive to get towards one in our work environment. On the just broader macro figures, as I said, we're projecting 4.2% this year. We're likely to be at 6%. We'll be dealing with the fiscal imbalances that the President has already mentioned to make sure that our budget deficit drops to single digit and is able to work in conjunction with monetary policy to create a stable macro environment through a variety of strategies, by expanding the tax base, make sure that there's bigger coverage, and also controlling expenditure, dealing with corruption, and improving the efficiency of collection from our borders and from within. In terms of the fiscal balances, our current account is well behaved at minus 2.6% of GDP average, so we're not getting any risk on that front. I must say that those of you who are investing in the equity market, the Zimbabwe Stock Exchange has cumulatively outperformed the American market. It has returned 2,000% since March 2009. The S&P, the American market, has done 140%. Invest in Zimbabwe. That is the message. You make money. And you know what? Given the literacy rate of Zimbabwe of the order of 85%, you compare that to GDP per capita, really we should be up there. That stock of human capital should deliver more productivity and up there. So there's a gap that we have to traverse. It's going to happen. And that's what we mean by getting to that upper middle income status in 2030. I'm just giving, I compare Zimbabwe, Kenya, and so forth, and South Africa, so that you can see where we stack up. I'll just move faster. In terms of exports, the bulk of our exports is the mining sector. It produces 61% of all our export revenue. So it's gold. The governor will elaborate on the gold sector. It's platinum, it's chrome, and other minerals. This year we had already we were showing that there will be a record gold output going forward, and want to do more to support the sector, because that's what will help us build gold reserves for us to have a stronger monetary policy and exchange rate policy environment going forward. You need reserves to have a strong currency, as you can imagine. So I'll move faster. In terms of imports, we import quite a bit: fuel, wheat, cooking oil, and so forth. But our current account is very disciplined. As I said, minus 2.6% of GDP is not bad. Inflation has been well behaved, hovering between 2 and 6%. Currently, we're at about 4%. We think it may creep up. I was watching the prices. I must say, the last week, we just hit that 6% mark. But it's still reasonable, in my view. I don't think we should be able to go above that. Now, in terms of minerals, there's a map of what it looks like in terms of distribution. In terms of geological services, we have mapped the whole of Zimbabwe. We know what's where, and we know what to find, whatever minerals. I must hasten to say that the mining sector needs $11 billion of investment to unlock all the value that is underground. So that's an opportunity for you. Go for it. On the soft commodities front, agriculture, we're doing very well on tobacco, and again, the governor will elaborate. We had a record season this year on tobacco. We had what, 25? 250 million. Yeah, 250 million. It's incredible. It's the best season ever, I think, since in the last 40 years. In the life of the tobacco sector, this was the best year. That's what I'm hearing. So it's all looking good. Opportunities abound here, where they're looking at maize, sugarcane, soybeans. The sector is open for business. We've run a very successful program, which His Excellency started when he was Vice President, called the Command Agriculture Program, Presidential Input Program, which has brought the bulk of our farmers into the more productive agricultural space, where they're looking at maize, at wheat. They're in there doing it and making sure that we're self-sufficient in food, and we don't import as much. Now, manufacturing sector is quite diverse. Its growth is about 3%, so it's not been growing strongly. It's been impacted by the shortage of foreign currency, power costs, and so forth, but also competitiveness issues, because we're using a hard currency, which is US dollar. It has benefits, because that has stabilized inflation, but then the costs, as they say in economics, you benefit somewhere, you lose somewhere. It shows with the manufacturing sector only growing at 2.6%, just below 3% per annum. But it's well diversified, and the idea is to retool that sector and move the capacity utilization upwards. I happen to own a plastics factory myself, which I've owned for almost 30 years. I know the issues very, 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 very well on the ground when it comes to manufacturing. Now, on infrastructure, it's a great opportunity. The President talked about the public-private partnerships that he's pushing for you to be crowded into this space transparently, and would like your resources in doing so. As government, we're going to upscale our capacity to work with you to make sure these PPPs work, they deliver value for you, and they deliver value for us as well, the Zimbabweans. We're very strong financial sector, is well capitalized. The governor can elaborate. I won't say more about that. All I can say that we just need more innovation in the financial sector, whether it's introducing exchange-traded funds, which I tried to do, and then while I was busy working on it, a week later, I got a call that I should join the government, so I dropped it and joined the government. So, but I think Zimbabwe is great if you want to launch an exchange-traded fund, just to make sure there's an efficacy into your entry into the market, or indeed exit, at least offer that to investors. It's 2,000% rate of return since March 2009. What more do you want, So the arrears issue, which my colleague will elaborate on, we're seized with this. We need to obviously complete phase now 1. We've paid off the IMF. We now need to deal with the African Development Bank and the World Bank. They rank pari passu. You can't clear one without clearing the other. So we need $2.2 billion to clear that. Once they are done, then we attack the next lot, which is the $4 billion, the Paris Club debt, which is bilateral, and we are going to begin to engage on that front. We'll say more when we're in Bali at the World Bank IMF annual meetings. We'll meet some of you. Our roadmap will be clearer as we go. But I must say that work has already started through in Lima. We call it the Lima process, which has allowed us to focus and narrow our roadmap. One day we'll be coming to you when all this is done for a Eurobond issue. We want to get there, get back into the market after a full credit rating from Moody's and Fitch and others. So I'm going to move faster. The Excellency has already mentioned that we amended the Indigenization Act. Now you can invest as a foreign investor. You don't need a local partner. It's not compulsory. Although I always say, you know what? If you have the right partner on the ground, that's also insurance, because they know the terrain. They can move into the corridors for regulators and so forth, get you out of trouble. Some of the time, partner is always a good thing, but it's not compulsory. It's up to you. But we're seized with making sure that the ease of doing business environment is indeed easy. Indigenization Act was one way we did it. The president on Tuesday announced that we'll be amending the Companies Act so that it is easy then for investors to literally take a day to register a company online. Why not? And this whole slew of other reforms that will be enacting. I won't spend too much time on them. Maybe just to say that your investment is safe in Zimbabwe. We adhere to the law. We have the judiciary system that works. We will have an amicable legal resolution for any dispute through our court system. Here I've got, again, a list of legislative measures or other measures that will be enacted. The President announced these. I've only listed 10 of them in his State of the Nation address to Parliament on Tuesday. The Companies and Other Entities Bill is the number 1, and then a whole list of other things, the Mines and Minerals Act, the Gold Trade Bill, precious stones, and so forth, all the way down, including dealing with cybercrime, cybersecurity. We abide by the law, and we've got all the instruments for making sure that your investment is safe and you benefit and you enjoy that 2,000% rate of return I mentioned earlier. I won't talk about that. I won't talk about that. All I can say is Zimbabwe is open for business, and we hope to see you more and more in Harare going forward. I now take this opportunity to invite my colleague, Dr. Manguja, the governor, to say his remarks before I transition to my colleague from Exotics. Over to you, John.